You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Hello, Bill.
Hi, Giles.
Let's have a look to begin with at the FTSE chart that you have sent.
I've labelled these up clearer this week.
Yes, it makes it easier for me.
Yeah. FTSE is, the key thing here, Giles, on the FTSE is that while we're in an uptrend, and we need to break this 45.20 level. I'll put a horizontal line above it. There's two horizontal lines near there. So 55.20 is and we're not above the year's high yet. So that's forthcoming as well. So we're trapped in a narrow band. The 200-day, we're above the 200-day, which is fantastic news, but the 200-day is still sloping downwards, which isn't such great news, suggesting that it might just be a frothy rally, which might come to an end soon. It's certainly, from what I can see and what I see of the markets at the moment, it's sideways waiting to break out, and there's sort of any more than that we wishful thinking until we break that level. Now we're down about 43 today. I think we could certainly come back to the 50-day moving average. I would think 42 and below, around that sort of level, I would think we could easily trickle back to, and it might present some buying opportunities late summer. But again,
the 50-day moving average is the green line on the chart.
The 50-day moving average is the green line. Yeah. The bottom part of the picture is where the short-term moving averages gave you a reasonable entry point. Now the danger is that we had one early in 2009, and this didn't come to anything. So you've got to be able to say, well, I'm flexible here. If you get a short-term moving average system kicking in, it can produce some sporadic results, and it's not as reliable as having a longer-term system. But then, if you're getting a longer-term system, you're not going to be as sensitive as a shorter-term. So the penalty of having a shorter-term one is you're in at 2009 and when you're out. So you could actually be catching a cold with a shorter-term system. It's not as reliable. So, as much as it looks quite good on a headline manoeuvre, it doesn't generate a consistency on a grander scale.
Okay, Bill. Now let's look at ICAP, which is the next chart that you've sent over.
Yeah, ICAP, I think it's very much linked to the financial markets, this one. And what I've done here is this is rather a fancy chart. I put a weekly chart to this thing, and I've optimum time for going in there is when the green changes at the bottom. And this is linked to the inverse Fisher transform. Now, so we've looked at this before, and decided that this is a good long-term indicator, and it's kept you out of a lot of trouble. Yes, it looks a bit extended now, but I think if we believe the financials are going to continue, or the market's going to continue in a buoyant state on the upside, and I think the camps are divided in two sides. One suggests the market's going to come a lot lower, and there's another camp suggesting, no, we're going to have a V reversal here on the markets. And if you believe that we're going to go up, this could be a winner, because this one's directly linked to the futures trading systems, and they'll be in demand. And this share should benefit. And this is offering some upside for those who believe it's going to go high. This is about 12% outperform the sector, so it's a runner, and I think it's one that things will get better for them if the market conditions improve or remain stable.
Okay, Bill. Moving on to XMBR. What's that?
This is Brazilian job. This is a Brazilian fund, and as you can see, Brazil has had an enormous run earlier this year. And again, it's formatted in this sort of weekly basis. You can see that how good it was a few years back. December 2008, it was. It flicked up very nicely, stayed up until we had the red line coming in, and the whoosh drops right away. At the moment it's in an uptick, again looking like the ICAP chart. It's sort of steady, plodding upwards, and I think it's a very, very interesting play for recovery. This is Brazil had an interrupted growth path for its 19 years of growth last year, and for those who believe that Brazil's back on path again, this is back in business. This share, so this fund I think is certainly worth looking at to back Brazil. It looks okay. But everything looks okay when it's going up is when it comes down. Then one has to wonder, well, what's going wrong here? But okay for the moment.
So far, so good. All right. And finally, Bill, Palladium.
Palladium is an interesting one because we had notification that car sales, it's ludicrous to think that the initial claims last week on were 345,000, whereas when Lehman's went out, it was 175,000. It's doubly as bad. So, are things improving or not? Well, if they are on the car sales front, this could be a winner. This one, as you can see from the chart, is not extended at all. It's just moving above its 200-day now. in the same ilk that we saw the weekly charts there. This is now turning positive and is making a new higher high from recent times, and looks to have potential. Palladium is the alternative to platinum. Platinum's had a reasonable run last week on the back of the auto sales being less bad. Everything seems to be in a flavour of being less bad than expected at the moment. Although, if this story pans out and we see auto sales creep up, Palladium could be a winner. It's cheaper than platinum, and it might be a low-cost alternative for the catalytic converters.
Bill, thank you very much for those selections. Bill Rook from Redmayne Bentley. We'll chat again next week.
Thanks.